I'll sell 5 here. If we come back into this gap, I'll sell another 5. Oh shit. Y'all, I'm in 5 minis. Bro, look at the P and L today, yo. Oh my god. Oh my god. Oh my god.
This trade was a planned setup. Very clean, very high probability, but I made one huge mistake. Once I realized I made this mistake, my heart instantly dropped. But even with that, the trade played out perfectly. This mistake ended up giving me my biggest trading day to date. In this video, I wanted to show you guys exactly what I took, the mistake I made, and how you can learn from it. For those who may not know me, my name is Quan. I've been trading for almost 6 years now. I specialize in the futures market, specifically the NASDAQ. Make sure you like, comment, and subscribe, and be on the lookout for more videos in the future. So with that being said, let me show you my biggest trading day to date. Let's do it. All right, guys. So this trade happened on May the 29th, a Thursday. I usually get to the charts at about 8 o'clock. So this is what price looked like going into the morning session. So even though this structure has been bullish, I want to see some sort of retrace to a key area. So the key area that I had in mind, if we take this low to London high, half of this range here would be a great place for price to go to stay efficient. So I at least knew that we would get to half of this range here. So now how I treat every morning is figuring out what price levels or key areas will be used to hit our target now that we have it in mind. If we look up, we see there's a bearish gap here. And there's also another bearish gap here. So seeing that we displaced pretty far from London high, I wanted to see this gap stay open and for us to potentially use the lower gap to try to move lower. Now don't get me wrong, when you look at two gaps in this situation, you definitely want to account for the higher one, but I was thinking we were extremely bearish and in a rush to at least get to this area here. Now that we go to our lower time frame, you can see the accumulation that we are experiencing right here. This is exactly what you like to see before a big move happens, some sort of consolidation. So the best case scenario in this sense, since we have pretty equal highs and pretty equal lows, is for the highs to be taken out first so that we can target the lows and further. So now we just need to wait for some sort of move higher like we get here. Perfect. So as you can see, we got a dip into this hourly gap here. What strengthened our argument is if we look at the ES. So as we pull up ES, we see that we weren't able to take this high here, which was the start of that hourly gap that we were looking at. So with ES failing to make a higher high, but we were able to do so here on the NASDAQ, creates an SMT divergence. I don't get in too much detail into it on this video, but just think of it as a crack in correlation. Meaning it's giving us signs that price is ready to move out of the area. So as long as this SMT stayed in place, I was very confident on us coming to these levels down here. Now that we have everything in mind, it's just a matter of finding our entry on our lower time frame. For me specifically, it's the 1 minute to find an entry. And this is where our ATM model comes into play. For those who may be unfamiliar with the ATM model, I like to call it a very advanced break and retest idea based on time and key prices. So in this instance, the key price that we were looking at was the hourly gap. The time that we would look for price to move would be the 9:30 open. So what would set up the entry for us is looking at this time and price right here. So this down close candle formed a low, which led us into the hourly gap. So a close back under this area is a great sign that we're ready to shift bearish. And this is our ATM model. So there's two ways that you can attack it. You can either wait for the close like we get here and immediately get in, or you can wait for a test back of this area and then get in there. And that's, we get a nice tap of this area here, meaning I'm triggered in. This was the criteria for the trade. Very nice risk to reward, especially going for equilibrium of that range. As you can see here, it's almost a 7-to-1. Very, very good risk to reward. Now here, my friends, is where shit gets serious. So I treated this idea just like any other trade, following all my rules, following all the steps to getting in, and then I actually execute on it. Now usually, since this trade is before 9:30, I like to go a little lower risk meaning I would go 5 micros. The crazy shit is I wasn't paying attention to the ticker I was on and accidentally went 5 minis. For those people who may not know the difference between a micro and a mini, think of a mini being 10 times a micro. Meaning instead of 5 micros, I was actually in 50 micros. That makes a hell of a difference on your P&L. Now in this instance, as soon as I got triggered into the trade, my heart, like I said, literally sunk to my ass. For some reason, the over leverage was a little different this time than what I'm usually used to if I were ever to over leverage. Something came over me and I was a lot more confident in the trade because I've seen it so many times. So even though my account was at risk of a bigger loss than I would like, I truly trusted the trade and let it ride out. I want you guys to use this as an example showing you how consistency can truly help you even in times where you make mistakes. The fact that I entered the trade just like I would no other, having the right idea, right stop loss, right entry in mind, made me even more confident in this trade because I've seen it so many times. As you continue to grow in the market, as you continue to get experience, you'll learn your setup. You're gonna take it no matter what, and you need to trust it. So we let the trade play out, and as you can see, we get our target hit soon as 9:30 opens. Absolutely beautiful. Even though this was a very nice trade, my biggest trading day ever, over 10K on the day, it was a very structured trade, just like how I would treat any other one. And that's the biggest thing that I want to emphasize to you guys today. And that is consistency kills. It really just goes to show you that this is all a numbers game. Once you understand your probabilities and you find a setup that works for you time and time again, the amount of risk that you put on that trade does not matter. However, to be a professional trader, we want to make sure we're monitoring risk. And that's the only mistake I truly made today. I promise you guys, once you have a written strategy, a solid plan, and a solid risk management plan, trading is absolutely effortless. The hardest part is truly just sticking to your rules, sticking to that risk management plan, and sticking to one model. If you guys need help with that, I actually dropped in the description below our ATM model rating guide. As you can see, this is what our ATM model rating guide looks like. This is very beneficial when trading the model, and it shows you the different characteristics of each grade. As you can see, we also label how much risk you should be putting on your trade. So even on that setup I took, I definitely would rate it at least an A. Everything was aligning. So if you're still trying to use the ATM model or looking for a strategy to work with in general, this can be a good start for you to see what you need to be risking on your trades. We also have examples of different setups so that you can decipher what it looks like in real time. Once again, if you would like access to this, just click the link down below and it should start downloading immediately. Other than that, guys, I'm very grateful for this 10K day, but we all know on to the next trade. And that's the reality of trading. Yes, we have good days. Yes, we have bad days, but we're still on to the next day. Once you adopt this mindset, I promise you, your profitability will increase drastically. So with that being said, I hope you guys enjoyed it. Make sure you like, comment, and subscribe, and I'll see you in the next one.